Forget the media headlines echoing low inventory and unbreakable housing demand. The reality, active listings are surging back to pre-pandemic levels in key markets, and some of the industry's most hyped boom towns are suddenly, shockingly, overflowing with unsold homes. Florida, once a darling of the pandemic craze, is now drowning in inventory. Builders are scrambling, tossing steep incentives to lure in buyers who are increasingly hard to come by. We're talking about thousands and tens of thousands of speculative homes lingering on the market, some built not even without a permit, sold to hopeful buyers who may not ever qualify. It's a scene reminiscent of 2007, a time we swore we'd never revisit. Meanwhile, mortgage interest rates remain stubbornly high, decimating demand and leaving sellers clutching to unrealistic zestimates while their listings collect and stay on the shelf collecting that digital dust. If you think it's bad, consider this. New home sale figures don't even track cancellations. Imagine signing a contract in good faith only to walk away later, leaving the builder high and dry. With cancellations rates hitting 15%, the official data looks rosier than reality. And then there's the labor markets. Those shiny job numbers, overstated, massaged by outdated models. The real picture, weakening fundamentals, fewer real buyers, and a glut of homes waiting patiently for a rescue that may never arrive. Did this just become a buyer's market, or is it a seasonal head fake? The narrative of a tight market is crumbling, and the news story may just favor you buyers who've been waiting in the wings. Is this market truly shifting from a seller's market to a buyer's market? Or, here's the twist, are we just witnessing a seasonal blip in the housing cycle? We've seen a notable increase in active listings, a slowdown in sales, and new trends in builder sentiment. But what does this all mean for you, whether you're buyer, seller, or just someone watching on the sidelines? So do me a favor, hang in there. Let's break it all down. First, let's define the terms. In a seller's market, there's high demand and low inventory, giving sellers the upper hand in pricing negotiations. A buyer's market, on the other hand, happens when inventory exceeds demand, giving buyers the leverage to negotiate better deals. Right now, national active listings are up over 26% year over year, meaning buyers have more choices than they did this time last year. But here's the kicker. We're still 16% below pre-pandemic inventory levels overall. So while buyers may feel they're gaining an edge in some areas, this story isn't the same nationwide. Let's talk about some specifics. According to recent data, 10 states, Arizona, Colorado, Florida, Idaho, Oklahoma, Oregon, Tennessee, Texas, Utah, and Washington have fully returned or even surpassed their pre-pandemic inventory levels. This is a substantial marker because pre-2020 inventories was widely considered a more normal time period before the frenzy of bidding wars and over asking prices became the norm. Take Florida, for example. This state exemplifies just how complex localized these shifts can be. We're not just seeing more listings, we're seeing inventory driven up by a combination of factors. Hurricane rebuilds, damaged or distressed properties entering the market, and sweeping regulatory changes in the condo sector following the tragic Surfside collapse. Condo owners now face stricter requirements and higher insurance premiums, making it harder for sellers to hold on to that top dollar and easier for buyers to find negotiable deals. That's just one piece of the puzzle. Florida's once red-hot coastal markets from Tampa to Jacksonville are cooling, which would have been almost unthinkable a couple years ago. It's not just Florida. Across the Sun Belt, places like Texas and Arizona, markets that we saw unprecedented migration and investor activity during the pandemic, are seeing inventory bounce back as well. Builders in these regions ramped up production based on the assumption that demand would remain sky high. Now, with mortgage rates elevated and wage growth not keeping pace with home prices, the demand is softening, leaving more homes on the market. The Mountain West markets from Idaho to Utah are feeling similar pressures. Affordability concerns and stretched fundamentals are tempering buyer enthusiasm, transforming what were once a breakneck speed selling season into a more measured, buyer-friendly climate. This regional leveling up of inventory is one of the clearest signals yet that a market shift may be underway. Looking ahead, we may soon see several states join the ranks of those returning to pre-pandemic inventory levels. Alabama, Nebraska, Hawaii, and Georgia are all showing signs of upward inventory pressure. In Alabama and Nebraska, incremental shifts in population trends and local housing policies may gradually loosen the tight conditions that have persisted since 2020. Meanwhile, Hawaii's unique market, often driven by a mix of luxury buyers, second home purchasers, and international interest, could see a rebalancing as higher interest rates and elevated costs of living temper the historically brisk pace of sales. Georgia, another Sun Belt contender, has experienced rapid growth in the metro areas like Atlanta, but recent economic headwinds, affordability hurdles, and a potential pullback in out-of-state migration could nudge the inventory backward towards pre-pandemic levels. As these factors play out, these 4 states may soon offer buyers a range of options that simply weren't available a year ago. But here's the big question. Is this really the flip to a buyer's market or just seasonality? Historically, new home sales peak in March, while existing home sales hit their stride in June. October's new home sales were down almost 18% from the historical averages, but the market isn't average right now. We all know this. Builders, for example, are still overproducing, with inventories surpassing all-time records outside of the 2007 housing bubble. Speaking of builders, their sentiment is telling. According to the latest index, the optimism among home builders about future sales climbed to its highest level since April 2022. Even as they grapple with slow sales, stubbornly high mortgage rates, and unsettling rise in buyer cancellations, why the disconnect? Builders are operating under the assumption that as soon as interest rates show signs of steadying or even dipping slightly, buyers will flood back in, bringing the spring buying season's traditional lift. They're hoping that the pent-up demand we saw at the height of the pandemic will reignite. More favorable financing will make their newly built homes attractive once again, and this lull is just a passing phase. But we have to remember that builder sentiment is often a trailing indicator rather than a crystal ball. We saw a similar dynamic in the lead up to the last housing downturn. Builders clung on to that optimism, extending credit to buyers who might not qualify and churning out neighborhoods that never filled. Ultimately, sentiment never caught up, and the reality is it was too late. Today, if inventory continues to climb, buyer demand remains muted, and cancellations persist, the long-held optimism could evaporate. In other words, those numbers on paper may show rosy expectations for months ahead, but the broader market fundamentals, buyer affordability, stable employment, and genuine demand will determine whether this wave of optimism is justified or simply wishful thinking. So, what does this all mean for prices? Well, we're already seeing some softening in various corners of the market. Asking prices on average dropped nearly 2% between October and November. But here's the twist. These modest price reductions may not be giving us the full picture. That's because inventory is still lingering on the market, and sellers, bolstered by online estimates and past peak prices, are holding tight to those asking numbers. They're counting on those estimates as a safety net, imagining that their home's value will somehow remain intact despite fewer qualified buyers and cooling demand. The reality, though, is that affordability is becoming a serious pain point. It's been a pain point for years. Interest rates remain high, wage growth can't keep pace with the rising costs, and inflationary pressures are chipping away at the household budgets. At the same time, the labor market, which underpins buyer confidence, is showing cracks. When jobs become less secure or household income doesn't stretch as far, fewer buyers can confidently step into the market at the current price levels. This gap between seller expectations and buyer realities cannot hold forever. If sellers keep chasing yesterday's prices while buyers need tomorrow's affordability, something's got to give. Over time, we're likely to see more substantial discounts and price adjustments to align with what buyers can truly pay. That's the pressure cooker we're entering. As financial strains intensify, the willingness of sellers to wait for their dream price may evaporate. And when that happens, we might see sharper declines in a market that finally adjusts to match what's really happening on the ground. Here's where we land. The real estate market is in flux. Rising inventory and slower sales are giving buyers more power, but we're not fully in a buyer's market territory yet. Seasonality is playing a role, but affordability issues and the broader economy will determine if the shift becomes permanent. The housing market is entering a period of recalibration as sellers, builders, and buyers all wait to see which way the wind will truly blow. Is this just a seasonal cool down, or are we on the brink of a more lasting shift towards a buyer's market? The truth is, we're still in the thick of uncertainty. The coming months, especially as we head into spring buying season, will be the real test. Keep your eyes on inventory levels, interest rates, cancellation rates, and job numbers. These are the pressure points that will shape who holds the power in tomorrow's deals. Whether you're house hunting, considering listing your property, or simply fascinated by the state of the American real estate, this is a story that is still being written. For now, we've taken a look behind the curtain on some of the data, the trends, and the signals that might just mark the start of a new era in the housing market. Thanks for tuning in, and remember, this is another guaranteed video.